our guest is keeping a beady eye out on how to capitalise on the IPO trend, talking about Geffen, Picklebet and Illumina. Clayton Larkham joins us here from PAC, Pack Capital. Afternoon.
Thank
now, you've got, first I have to ask you, where is the driving need for a pre-IPO fund?
Well, it seems to be becoming more and more prevalent and needed in Australia. Companies are coming to market more to raise capital running into an IPO, 6 to 12 months, sometimes 18 months before. Firm up their balance sheet. Obviously, they've got aspirations why they're listing, so why do they need capital? Then that's when they come in and offer institutions essentially a convertible note or a discount to come in to the IPO price. So it's grown in Australia, and there's sort of 5 of us who are playing in that space now, from Regal to L1 to Elliston, Perennial and myself. We're the people who are in there at the moment, and it seems to be a bit more demand. So
we've been running the rule over some options out there at the moment. So let's go through what you've uncovered. So Geffen, is that correct?
Yep.
Tell us about that software. And look, an IPO is not too far away for that company. What do you like about it?
Geffen's an Israel tech story. There's been a few of them come to Australian market over the past 12, 18 months, which some have been well received and some haven't. And that's sort of, offshore tech is always going to have that feeling. What I like about Geffen is this is essentially a distribution platform or a connection for a lot of big businesses. They've started with insurance, where they've got some of the biggest insurance names in the world. Look at TAL, Manulife, Generali, some of the biggest insurance players in the world. Essentially, they've identified there's a bit of a hole in the fact there's a lot of agents that act for these groups around the world in Australia that essentially are running. They probably need a bit more, essentially are running their own businesses in a way. They need more back-end help with websites and compliance, and to really structure up their distribution network to say, here's a list of clients, how many am I targeting, how many am I, just to run a more efficient business manner. They've found a way where these companies have acquired or just use their software for a fee. They can get better compliance and regulation on their front end, and also the insurers get a look in at the agents, how many clients they have, how's their trade, how's their distribution going. It's a really nice way, and they've what I liked about them is when I went into this pre-IPO 12 months ago, they were doing 5 million revenue. Now they're coming to market at 16 million revenue, which is a really nice story. Morgan's got on board. It was run by RM Corporate Finance Group out of Perth, who Nathan Barwich, which I know, got involved with it. Now Morgan's have picked it up. So it just closed last Friday, and there's really good demand. So that's why I like that story.
And a story we know that we've spoken about esports, so it wouldn't be a Clayton interview without it. But this one is Picklebet, which I have to say the name is fantastic. So what's their specialty?
So we've spoken about this a couple of times, you and I, about Picklebet, and it's essentially, it's good to talk about esports again, and this is essentially a wagering system, but for esports. So this is essentially like a points bet, which came to market a while ago, but this is essentially Picklebet, which the founders have actually been on Ausbiz a few times, talking about their growth. They have essentially set up a new age wagering system where the younger generation can go and have a wager or a fantasy play with some of their friends about all esports matches that are happening around the world at any one time. So I'm very close to Picklebet. We've been long-term investors in that through, Pack Capital has a few divisions, and that's part of the Pack Private range that runs, and they're the private investments, and they're growing 100% quarter on quarter. They're about to raise 15 million going to an IPO to expand globally. I think that's about to come to market pretty well.
No doubt the pre-IPO markets are still very, very healthy for the time being. When we go to the public stage and the IPOs come through, there's been some pretty high-profile pranks locally over the past 6 months or so. It's becoming a bit more difficult now to go and convince the investment public to go and get involved with these IPOs when they see what the valuations are coming out of that pre-IPO phase.
Yeah, like it is. I think you guys know better than anyone. The IPO market's got a little soft of late, and it's good to see Geffen's got enough support to come into it at a $127 million valuation. Again, I know what you mean with that, and that's definitely a concern for a group like mine to say, is a 20% discount over a 12-month period enough?
Yeah.
Enough risk to wear. Yeah. This mightn't even come to IPO. Now, this might get kicked down. Something might happen to the company. That's a risk that we wear. But you essentially do have a convertible note where it converts into equity, so you do have rights there. Essentially, we don't want to get to that stage, but it's definitely a risk, and I think that it's definitely that's why there's a few companies really only offering this in the space in Australia. I think that's sort of where it's going.
So, like everything, do your own research. Due diligence is required. Be selective.
Yeah, and I think that that's why you sort of have groups like myself to go out and hand pick out of you might have 50. We're looking at 4 at the moment. One's in alumina, a HPA, lithium play that's coming out soon. So there's things that happen.
All right, lucky you're doing the research and telling us all about the spicier end of the market. Thank you so much, Clayton Larkin from PAC Capital.